If you have a startup business and you have no sales, no history, no nothing, it can be very complicated to build business credit. In today's conversation, I have the answer for you. I'll give you all the tips and hacks that you can implement today, not yesterday, not tomorrow, today, to build the business credit for your startup, no matter what. So here's the overview I really want you to pay attention to. So before we actually build business credit for a startup with no sales, no history, you need to understand a business credit score. What is it and how they actually compile the data that they put into the business credit score in the first place. So basically, they put more than 800 variables that actually make up your business credit score in the end. And you have more than 800. You have 800 to 1,000. And you have 3 or 4 players in this space that compile data. You have Dun & Bradstreet, which is the most known one. You also have Equifax, and you have Experian, and you also have the FICO Business Scoring Service, FBSS. What I want to say here is that if you are a startup and you have no sales, you have no history, no nothing, the only thing you can start doing is to first register with those business credit agencies. You need to register with Dun & Bradstreet and get your DUNS number. You want to register with Equifax Business, and you want to register with Experian. The reason why you want to do this is that you want to be in their system. You want to start having a file. They need to create a file on your startup business. Okay. By the way, boss, welcome back to the show. It's really a pleasure to have you here. And so you first want to sign up with them. The second thing you want to have a clear understanding of the business credit scores for each of them, like for each bureau. How they produce the data. Once you sign up with them, they will let you know everything. They'll let you know how to increase, how to improve your credit score, how to actually have a credit score in the first place. Okay, and you don't need to have sales to have credit scores. You can actually have a secure credit card, for example. Or right now, if you are paying rent, you can actually tell the landlord to report your data to the business credit bureau. So you got to do something to start the process. Okay, remember that you have no way to have a free credit score on the business side, unlike the personal side. Okay, there are a lot of places where you can get a free personal credit score, but on the business side you have to pay for it. But it's important to pay for it. Those are what we call great investments. Okay. Now, one thing I want to give you the approach you need to really pay attention to. So if you are a startup and you are a startup business, you have no sales, no history, no nothing, you need to understand that for you to build business credit, you need to understand the components of a regular business credit score. Okay, normally all business credit scores, whether they were compiled by Dun & Bradstreet, Experian, Equifax, or FBSS, they actually account for 5 elements, give or take 5 elements. So you have your payment history, you have the age of your credit history, you have what we call the DTI portion of it, debt and debt usage. You also have the risk of the industry your startup is in. So if your startup is in a very, let's say, quote unquote, controversial industry, you might have problems qualifying for a business credit in the first place. And you also need to think about your company size. So if you are a startup, by definition, you're not big. You cannot be a startup and be big at the same time, right? So you have to account for the fact that when you start, your business credit score will be small, will be very low. Now, just make sure it ain't too far from 80, for example, because when we talk about the Dun & Bradstreet Paydesk score, for example, the score ranges from 0 to 100. And what you want to do is 80 is considered acceptable credit score, and you don't want to be too far away from the 80. Okay. And by the way, boss, let me quickly remind you of today's topic. We are having a conversation about how to build business credit for a startup with no sales, no history, no nothing. And it's also important to understand that when we talk about the business credit scores, you do have different business credit scores. And the Dun & Bradstreet, I say their score ranges from 0 to 100. You have for the Equifax Business Delinquency Risk Score, the score ranges from 224 to 580. For the FICO Liquid Credit Small Business Scoring Service, the score fluctuates from 0 to 300. And for the IntelliScore Plus from Experian, the score is kind of similar to the Dun & Bradstreet Paydesk. In other words, it oscillates from 0 to 100. So you have the four primary business credit scores. So for you to build business credit as a startup business with no sales, no history, no nothing, number one, you want to register with those four services. Number two, you want to introduce your very first element, your very first data point. And this can be the rent you're paying right now, or this could be a very easy net 30 account that you sign up for. You have lots of net 30 accounts that will actually approve you real fast as soon as you make $50 to $100 in payments. So I want you to avail yourself of those opportunities. Here's a review I really want you to pay attention to. The thing is, if you are trying to build a startup business credit score and you are trying to improve your startup business credit score with no sales, no history, no nothing, you need to actually first register. Second, make sure that you have one net 30 vendor. Number three, you need to actually understand how business credit scores are used, because then you can actually strategize the proper way. Ideally, what you want to do here is you want to actually apply for a startup business credit card at the very institution where you are currently are at. It can be a startup business credit card. It can be, let's just say it can be a business credit card, or it can be a business line of credit or business loan, or a business working capital loan, for example, depending on the need that you want to fulfill at the operational level in your business. Okay. And because when we talk about business credit scores, they are used in a variety of ways. Business credit scores help determine how much you can borrow. Like, can you borrow 1,000 versus 100,000? Your business credit score partially will determine that, because if you have a high payday score, you're telling the lender that, hey, listen, yes, I can repay this amount of money no matter what. Even if I'm not having sales right now, I do have some initial cash, let's say some initial equity that I can tap into. And business credit scores also are very important when it comes to business insurance. Some insurance companies in the country, especially the bigger ones, they use systematically, and I mean systematically, they're not even thinking about it. They use systematically your payday score, your IntelliPlus score, your SBSS score, and your Equifax score to see exactly where you are at on the credit risk spectrum. You also have you are able to get more time to pay, because a lot of vendors love to have love to extend credit to startups that pay on time. So if you have no sales, that's fine, but you still have to run a business. You still have to buy office supplies. You still have to pay rent. You still have to do other stuff that will help you hopefully get sales in the future. So those purchases, you can put them on a credit card, or you can have net 30 or net 45 or net 60 accounts set up for you. Here are the steps I really want you to pay attention to, boss. I want to quickly remind you of today's topic. We're having a conversation about how to build startup business credit if you have no sales, no history, no nothing. What are the steps you need to take? So number one, you want to sign up for the services that I just told you about, right? You want to sign up for Dun & Bradstreet. You want to sign up for Equifax. You want to sign up for Experian. You want to sign up for the FACO SPSS service. Next, you want to buy something from a net 30 vendor. So you want to, and again, this has to be a very small purchase. We're not speaking about breaking the bank. There is no bank anyway. You're a startup. So you want to start little. You want to buy $30, $50, $100. Okay, so when you have this setup, this is kind of cool. And the third thing I want you to do here is you want to ask for your landlord to please report your data also. And the next thing you want to do here is to you want to contact your current financial institution to see if you can get some kind of credit from them. Why should you go to your current institution? Is because they know you. They have been doing business with you for a while. They know your inflows and outflows. So even if you are a startup with no operational history, to them you do have history. To them you do have some kind of history, and they can tap into that history to grant you the equity that the loan that you need. Okay, so you want to start doing that. And it's important to understand that you want to check your business credit scores. Once you establish your business credit score for your startup, you want to check that business credit score on a continual basis because mistakes do happen, because credit scores change, because fraudulent activities always around the corner, and you are able to know whether or not you can get better financing by checking your business credit scores on time. Okay, and the thing is, the best way to do this is to automate it, to systematize it. You want to make it systematic, okay, so that you don't even think about it. Like you can just say you can just have a reminder that tells you every quarter or every month I'm going to check my business credit score to see where I'm currently at. So this will help you a lot in terms of financial discipline in the long run. Fantastic. Here is a bonus for you. If you're still around here, I want to give you a bonus here by saying that if you have a startup, and you are looking to build your startup business credit, even if you have no sales, no history, no nothing, it's important to understand that once you sign up for those four agencies, like if you sign up for those services, Dun and Bradstreet, Equifax, Experian, and FICO SBSS, you want to actually and you want to pay for those. You want to pay for those because they're not for free. Okay, you're running a business, so it's important to really start thinking in terms of business. So you are paying for services that add value to your bottom line, because if you have good credit, you will be able to get better financing, and better financing will add value to your bottom line. What you want to do here is that you want to systematically start making payments. You want to make payments all the time, never miss a payment, because your payment history is instrumental to your business credit score. It doesn't matter whether you're a startup or an established business, a large component of your business credit score in all four models is always tied to your payment history. Next, you have your debt mix in terms of your DTI, in terms of your debt to income ratio, how much you're making. Right now, you have no sales, nothing, but you have to think about your existing cash, your cash position, your cash balance. Like when you started your business, even if this is a startup, when you started the business, investors had to put money in the business, right? Initial cash flow. It has to be a seed, cash injection. It can be from the founders, it can be from the family members, it can be for anybody. So the lenders or credit card issuers will they will evaluate how much cash you have right now versus how much you're spending. This is really important. So if you want to improve your credit score, think about those two elements. And you also want to make sure that you review your business credit reports, maybe let's say on a monthly basis or a quarterly basis. What we tell our clients, what we do ourselves, is to check our business credit reports on a monthly basis. That way, if there is a problem, you have a higher chance of catching the problem early on and addressing it, right? You can nip it in the bud if you can catch you like at the very beginning. But if you wait until the problem is like 3 months in or 6 months in, it could be problematic for you to start fixing it. You can still fix it though. Don't get me wrong. You can still fix it, but it takes longer. Here is a decision I want you to think about, boss. This is an important decision here. What you really need to understand here is that when we're talking about business credit for your startups, you need to understand that a lot of business users, a lot of stakeholders are using this business credit report to gauge your startup business. For example, let's say you want to have a joint venture, and you are a startup. Your partner, your potential partner, can check your business credit to see where you are currently are at. So it's important to clear that. I mean, if you are trying to get business insurance, the insurance company might or might not check your business credit to see where you are at. If you are applying for a regular loan, business line of credit, or business credit card, the lender or credit card issuer might check your business credit score to see where your startup is really at the moment. And so you can see that anytime you want to engage in a business transaction, you have the ability, you have the potential for the other party, for your partner, to actually check your business credit. So that what you want to do is, if you want to build business credit over time, you want to make sure that all vendors you deal with, you ask them for a favor, and that favor should be for them to report your data to the credit bureaus systematically. Because the thing is, if you are working hard and you are building a great financial situation, a great financial process whereby you pay your bills on time every month, you want to get credit for it. And the only way to get credit for this is to contact the vendors and explain to them, hey, listen, could you please just do me a favor? Please report my data to Dun& Bradstreet, Experian, Equifax, and FICO SBSS. That way you are building credit. That way you are reaping the benefits of your good behavior, right? When it comes to managing credit. And one thing I want to tell you here is that your business partners, your lenders, they're not mandated. It's not mandatory for them to report your data. It's a favor they're doing to you. So that's why sometimes you might need to nudge them. Sometimes you might need to press them a little bit to kind of help you out. So this is part of the game, though. Now, here's the decision time for you. If you are a startup and you are trying and you have no sales, no revenue, no nothing, no history, you got to ask yourself, is this the right time for me to build business credit? Should I do it now, or should I do it after 3 months, after 6 months, after 1 year? Because sometimes timing is quite essential. Timing is quite essential. Because you might want to say, I want to build my business credit now. But when you look at the fundamentals of your startup, when you look at the operational fundamentals, you look at the financial fundamentals, you look at the legal fundamentals, maybe this is not the right time for you to build business credit because your startup itself is still shaky. So that's what we call the realistic, like the sort of a reality check. Because not every startup can qualify for business credit within the first 30 days or 3 months. It really happens, okay? That's number one. Number two, you need to really ask yourself, have I clearly separated my personal affairs from my business affairs? So important, boss. So important. You need to have a clear segregation between your personal affairs and your business's affairs so that you can build your startup business credit real fast. Because if you are mixing those two, things can get very messy and complicated, not only in terms of your credit scores, but also in terms of your personal finances. So we're looking at your personal budget and your business budget, but also you have a big problem that could potentially come from the IRS, because the Internal Revenue Service doesn't like it when individual taxpayers are actually taking advantage of the business scheme or business schemes to actually write off stuff that normally they wouldn't be able to write off. So it's a crime, by the way, though, to lie on a tax return. So don't do this. So the bottom line is what? The bottom line is, if you have a startup business, no sales, no history, no nothing, and you are trying to build business credit, make sure you sign up with the 4 services that I just spoke about. Make sure that you have your vendors report data. Make sure that you reach out to vendors who offer net 30 net 30 accounts, and contact your bank, the bank where you're currently at, so you can see if they can extend to you business credit. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to build startup business credit, and with no sales, no history, no nothing. So I give you the overview, the approach, the review, the steps you need to take, the bonus, the decision, and the decision time. Thank you so much for your attention. God bless you. I will see you next time. But until then, remember, stay marvelous.